Okay, Coach T here from TackleTrading.com, back with this week's edition of the Commodities Report. It is Thursday, April 23rd, 2015. Let's jump right into it. First thing I'm going to do is I create a little Excel file just to kind of keep track of some of the levels and the bull bear calls that I made on the Commodities Report, so we can go through this and kind of keep my place as we go. Let's start with crude oil. We had a slightly bullish call on this last week, and we're keeping that slightly bullish call on it right now. 55 to 60 is the zone that we're in right here. Let's go look at the contract itself. And this is one we've talked about quite a bit. And with the dollar kind of spinning its wheels, not really knowing where to go, crude oil has really taken advantage of that. And you've seen a breakout, rally, it bumped its head, it faded back just like we talked about. Last week I told you to look for the 55 zone. It actually didn't quite come back that far. It hit about 55.73. And then a good green pivot candlestick here today. And really strong. You saw a big run up. In fact, at one point it was above $58 a barrel, pressing resistance. Still got some upward pressure here, and we're keeping a slightly bullish call. The fundamentals behind crude prices don't really have that much bullishness to them. Supply is at really extreme levels. You've got a lot of stuff in the tanks there, in the supply. And you got to wonder what these companies are going to do once crude hits 59, 60, 62. Are they going to come in and want to dump some of that supply? We'll have to wait and see. We are still using quite a bit here in the U.S. We are importing quite a bit of crude oil still. I think 7-8 million barrels a day is what I saw from the EIA on Wednesday. And so you're still seeing demand for the underlying commodity here in the U.S. Globally, demand, you have to wonder about that with some economic weakness around the world. We saw some poor numbers out of China, still got problems in Greece. I mean, there's a lot going on here. Technicals, which is something we're going to focus quite a bit, do remain slightly bullish. We had a breakout, a new high, a pullback, a pivot. We're showing some strength here. Okay, so we're going to keep an eye on that. We're going to keep a slightly bullish call on crude oil. Natural gas, last week we had a neutral call, support at 247, resistance at 273. We're going to keep that neutral call. Let's go look at the commodity. And where are you? NG. There we are. It's good to keep a watch list over here, by the way. That way you can quickly get into the information you need, whether it's commodities watch list or whatever it is that you're keeping track of. Support hasn't changed on natural gas. Long-term downtrend, long-term weakness, but it's been really flattening out the last few months. It's moving into a range here. Support, resistance at 273. Until you get a break from that range, I'd be fairly neutral on natural gas. Could be a good naked put candidate, actually, because of that. Slowing momentum on a downtrend. It is, that kind of candidate from a technical standpoint. Gold had some action this week. I'm giving it a neutral call again until we break that range. A lot of the market is stuck in the mud in many regards. We did see some pressure in gold, though, so there's some interesting action we need to talk about. Big down day on Wednesday of this week, on the 22nd, you saw a pretty sharp sell-off in gold, 1205 all the way down to about 1185. Support here at 1180, that's what we called last week. That would be your bear trigger. Resistance, I'm moving it down to about 1210. You also have some resistance up here at 1225 that you would need to pay attention to as well. But generally, probably the better directional trade would be a bear sell-off if the dollar strength and gold weakened. You saw quite a few headlines through the week that kind of hinted that speculators were pulling out of the gold market short term. They're abandoning those long positions. That was the reasoning I heard for Wednesday's sell-off. We'll see how that level plays itself out. A break at support, you've got a $30 sell-off in play. So that'd be something definitely keep an eye on. Silver, giving it a neutral call myself. No, you might be thinking neutral. Well, a lot of trading, especially commodities trading, you're waiting for levels. Now, if you're looking at the physical, you might even be interested, as a buyer down here in the 15s on the spot price. You wouldn't pay that necessarily if you're going to a coin shop or something like that. It depends on what you're actually purchasing. But support at 1540. We're at 1580 right now, so another 30-40 cent sell-off. I mean, you could be looking at buying silver down here from a longer-term perspective. Naked puts on the ETF work, SLV. A lot of 401k, I should say our IRA traders look at that underlying ETF as a potential commodity to sell naked puts against. It's a traditionally good strategy. Sell-off here has probably got a little bit more steam to it, though, and that's why I'm giving it a neutral call. I'd be much more interested around the 1550 level, as it comes down here and tries to find some support. Let's go on to copper. Last week we had a +1 call on this one. We thought that it was showing some stimulus from China, creating some implied demand. It had some volatility this week. We're giving it a 0 to +1 call. I'm still holding that +1 in there a little bit. So, and thinking about it, we did put a buy in above 271 or so. Okay, so that's the copper contract. Let's take a look at HG. At 271 level, it had a nice little bump up rally going. It sold off through most of this week. We had a red candle last Friday, Monday, Tuesday, Wednesday. Here we are. We're selling, showing some pressure. I'm still looking at this and I'm saying if we can pivot above this range right here, just from this higher low, old resistance, new support, generally developing uptrend, that could be a good swing trade trigger for an upside play. Neutral until you get that trigger. You gotta build that in as a trigger, and probably just the underlying futures contract directionally is what you would play on this one. Palladium, holding a 0 to 1 +1. I do like palladium. I've talked about it on the commodities report before. I do like the underlying commodity. It's got an inverted head and shoulders pattern. A couple of down days this week, couple of up days. Trigger this one at 790. Right there's the zone. Until that breaks, I know that's still a $20 range between here and there. I would wait on that because you've got clear sailing ahead. If you can trigger 790, you probably got 40, 50 points to the upside in bullishness. This one is one I would keep an alert on, keep an eye on it, and watch for the futures contract to break above that 790 zone. Platinum, giving this a -1 call this week. Bear pressure is definitely remaining on the platinum. There's I read a bunch of interesting articles on platinum this week, and just so many pressures on it from a macro standpoint. We saw lower high, lower high, lower high, started to battle back, tried to find itself. It really did fail in here, though. You had a breakdown at support. If we look at the platinum, last week we called support 1140. And that thing broke and dropped about 15 points, just on that trigger candlestick on Wednesday. Definitely a -1 call on that one. That I usually rank things between -3 and +3, so slightly bear call. Target levels I'd be going for 1090, 1115 intermediate target. Stop loss probably around the 1155 mark right here. All right. Next would be live cattle, giving this a -1 call. Speculative traders liquidated their long positions. They were holding them. We saw some pressure in that market this week. Last week we gave it a bearish call as well. Let's go take a look at the cattle contract. LE. Now, when you see gaps like this, I've talked about this in the commodities report before, one thing that you want to do is you want to put in the extra letters to actually specify the contract. So for June, you want to do M5, and then it will smooth out those gaps and give you the prices. And a good green candlestick today, but in general, lower high, lower high, lower high, real red candlestick, broke below 148. Generally developing 20-day moving average right here about 150. Keep an eye on that 150 as a bear retracement. Hit this, trigger back down. That would be an excellent setup for a trade. Long-term targeting somewhere in the 140 range is what we would look at. Stop loss probably from 150 about 153, 154, just at these high points. Okay, lean hogs. We're giving this one a 0 to -1. Support at 75, resistance at 80. I read some data where meat export demand was weakening this week. Prices right now at 78.05. Let's go take a look at the contract. And same thing, you may need to put in the extra letters when you're looking at some of these contracts that have rolled through to get your smooth chart so that you can see it. You can see the general downtrend. One of the things I'm backing off a little bit on this from a purely bearish play is that it's lost that trend line. And so now if you're not in a trade, you're still waiting for it to pivot below 75, which is support. Plenty of pressure in the contract, though. If you did want to short it in here, you could put a stop loss around the 80 level and play that as a bearish one. This is one where you'd go down to like an hourly chart and find a trigger on a shorter time frame. Probably, 75 is a great trigger from a swing in position trading standpoint, which is mostly what we do with commodities. These are not day trades. They're not trades that you generally need to hold just for a couple of days. Usually people who are watching commodities and trading commodities, if they're not day trading, which is usually for crude oil, gold, or the indexes, then they're usually position trading because of seasonality implications, or they're looking for trends, or they're looking for something that they could build a position into. And that's something to keep in mind when you're thinking about commodities. Generally, a good trigger below 75. Fibonacci extensions would put us somewhere around the 70 to 68 mark from a long-term targeting standpoint. Next is corn. Giving this a -1 call. I did see some pretty big block trades coming in on the 380 puts, where traders were selling naked puts, at 380. Now let's go take a look at that. ZC. That's in the money. That's taking delivery in the money. Must be somebody working that contract, or else they're just getting rid of puts that they did own. This would be a tremendous technical signal if we could break below support. Support is right in here in the 365 to 370 mark. It's got a lower high, just from a very short-term standpoint. It's gotten pressure on it from a long-term position. If we look back at this thing, I would keep a real close eye on that level. It's at the low end of that level. Some traders are coming in and selling put options against this. They're speculating that support would hold. If you are going to trade anything like that, then you would probably need to have a hedging technique in mind or know how to deal with that. You would need to have specific contracts, that you've targeted as well. But support definitely is the key area here to keep an eye on. Next is oats. Giving this a -1 call. Last week we called support at 255. It broke below that. Doesn't really have support on it right now. Resistance at 270. This was a really good signal. 255 support broke down. Actually, a good red candle in here would have been a trigger. Selling off pretty precipitously. Long-term downtrend. Classic bearish signal. Two more. Let's look at soybeans. Price at 977. We're giving this a -0 to a -1 call. Slightly bearish. Support at 945. 993 at resistance. Take a look at soybeans. $9.93 resistance. 945 support. Kind of that bear retracement signal. The reason we're calling it 0 to -1 is it's holding that range. Some of the other soft ag commodities were actually pressing support or breaking support. We just saw corn and oats. Now, soybeans actually had a pretty good couple of weeks, kind of holding the range. More neutral than the other two. If you're going to play one of the agricultural ones, you might want to consider that one of the other two. And then wheat futures. I am very interested in wheat, and I've talked about it in the Commodities Report several times. I'm very interested in this inverted head and shoulders pattern forming. Let's take a look at the levels that we called it. 0 to +1 here, support at 480, resistance 545. We did see some poor export data out of the U.S., which is why it didn't really have much, of a rebound here this week. I'm going to be watching these levels really, really closely because, wheat has some pretty liquid option chains as well. You can get in there and sell naked puts against wheat, that kind of thing. At these lows, you get good prices on that. Now, you are taking on, a technical risk there as well. So usually you're going to want to get a lot of cushion if you were going to do that. You get leverage in the options market with futures, so it's something to consider. All right, that has been the Commodities Report, and we're going to be doing this each week, just kind of going through some of the technical charts, talking about some of the information out there, get you guys interested in the futures markets. Like anything, investing involves risk. You need to make decisions on your own end, on your own accord. We're here to provide information and just kind of talk about the underlying characteristics. So hopefully you're getting some value out of that and getting some interest in it. And remember, you don't have to trade every one of the commodities. I think crude oil and gold are probably the two that are going to grab the most attention by investors because they're most traditionally used by almost everybody. ETF investors or commodities investors, futures traders, portfolio managers, those ones are always in the forefront, so keep an eye on those. Okay, Coach T from TackleTrading.com, get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.